Happy rainy Monday, everybody. I hope everyone is doing well and everyone had a great weekend. Today is a pretty wild day as we get started. Today is September 20th, 2021, and of course, this is your Monday market update video. So today's a risk-off Monday. At least that's as we get started, and that's what it looks like what the market's telling us. We're seeing the markets open lower as usual. Let's do a quick review of last week. We'll talk about what we're seeing today and what we're going to see forward, looking forward into the week. So let's jump right in. Let's talk about last week. Last Monday started off early attempt at a rally, but that was short-lived as the market started to worry about inflation and taxes, new taxes. That's really sort of what we had. S&P 500 was up about 0.25% at the end of the day. Talk already has started about what the planning is going to be for Friday. Quadruple witching with options and index rebalancing. So talk already started about that, and we'll see how that plays out. Tuesday started again strong, following a good CPI number for August, and that was leading to the thought that the Fed was going to be more accommodative for longer. So late in the afternoon, we had disappointment from the Apple event, and then more staging for that Friday quadruple witching. The S&P 500 finished down about 0.5% for the day. Yo-yo continued on Wednesday. So U.S. economic data overshadowed all the weird and concerning Chinese data, and the market, the S&P 500, was up about 1% for the day. Thursday, a lot of economic data hit on Thursday. Retail sales were strong. Other upbeat economic data. Early on, the S&P 500 revisited the lows for the week, but the market came back and ended nearly unchanged for the day. S&P 500 started Friday pulling back in early trading, options action, as I mentioned, and economic data pushed the markets from positive to negative territory back and forth throughout the day as we expected. Treasury yields moved up, new tax talk again, and a miss from consumer sentiment, the consumer sentiment numbers. And then this Evergrande thing out of China. We'll talk about that in a minute. The S&P 500 ended the day almost down 1%. So for the week, S&P 500 and NASDAQ were down about 0.5%. The Dow was nearly unchanged, down slightly. But quite frankly, all that's already a memory. We're already full force into this week. As we get started today, overnight, the futures were down close to 2% for the U.S. markets. Hong Kong was trading down about 3%. Europe was down 1% to 2%. China, Japan, South Korea, all closed for a holiday, conveniently so. So what's moving markets today, and what are we watching this week? Let's talk about the week first. So this is going to be a pretty busy week. The biggest news will come Wednesday afternoon, 2 p.m. Eastern to be exact, the Federal Reserve statement. As we've discussed, all eyes are going to be on the Fed. The Fed's going to be watching the labor markets, as we know. But guess what? Of course, there's no extra labor information between now and then. So what we do know is that maybe a falling market will make the difference in what they say. We just don't know. But so what we do expect to hear from the Fed is that we expect them to announce their tapering, and that they'll start probably late in the year, probably December, at $15 billion a month, pulling back. If we hear that, it'll just be noise. If we hear anything but that, then we'll see some extra volatility that comes along. We'll also get flash PMI reports later in the week and housing info all week long. Less important overall, but it does continue to build the narrative. So what's next for this market? So first, let's just hit on the Evergrande piece out of China. There is not much solid information out on it yet, but people are starting to talk about it, and they're saying it smells a little bit like Lehman Brothers. So obviously, we need to back off on that and see what happens. That's what the fear mongers are saying. It remains to be seen. But watch for two main things. Number one, China may step in and stop this from spinning out of control. And number two, companies that not like Lehman in so many ways, and many are saying that the risk of contagion is really not there, or it's very, very low. So we'll see how this plays out. It is affecting today's market. We'll see how that goes. Speaking of which, let's talk about what the next 4 to 6 weeks look like in this market, because that's really going to determine what this market looks like by the end of the year. So we'll start, as I mentioned, with the Fed meeting. The taper. If it goes as we've said, then again, it's just noise. We'll see what happens. But if anything else, watch out. We're going to get that volatility. Other than the Fed meeting, Washington's going to need to get to work. And that doesn't always bode well for the markets, but we're going to see what happens. September 27th, the House is set to vote on the $3.5 trillion infrastructure bill. And they're also going to they need to work on the $1 trillion bipartisan infrastructure bill. So we'll see how that happens, how that impacts taxes. We'll have to watch that closely to see how that goes. Buy September 30th, expect a continuing resolution, or the government shuts down on October 1. So we have to see that happen. There's also an estimate that October 15th, the U.S. government's going to run out of money because we're going to hit the debt ceiling. So we've got to have an approval to increase the debt ceiling. So we're starting to hear the dire predictions. The president last week talked about the recession that would come if we don't raise the debt ceiling. Over the weekend, Janet Yellen saying that it will be catastrophic. I think she was pretty clear. So finally, after that, earnings are going to start October 12th, and if we see downgrades to expectations, we're going to see some headwinds based on where valuations are for 2022. So all of that may lead that the seasonally weak period of this time in the market may play out to its history, but I don't think it's an overall game changer for the long term. So please, if you want to talk about that, let me know. We can talk about that and see how that goes. But remember, stay nimble and stay tuned. The planning video will be out on Friday, so keep an eye on that. And obviously next week we'll start with, on the Monday after that, we'll get more in-depth market action. So by the way, did you notice what word was not mentioned once in today's video? If you could figure out what that important word is, please just send me a quick email. I would be interested to know if you figured that out. Regardless, have a great weekend, and we'll see you later in the week.